Alright, so on this next episode of the Speak Dumb Investing for Beginners series, this one I'm going to be calling Day Trading versus Buy and Hold. And some of you might not know what I'm talking about, but I will explain here what I am referring to when I use these terms. You know, one of the things I've said constantly in this series is that it's not a get-rich-quick scheme, and it's not. I don't care what method you use. It's very, very difficult, if not nearly impossible, to get rich quickly. Can you build wealth over time? Yes. For sure. You can get very wealthy, in fact, over time, depending on how much you put in, how patient you are, how young you are. There's different factors to it, how well the stock market does, all that stuff. And by the way, for this series, I'm talking specifically about the stock market, not private investments. Like if you want to invest in a private company privately outside the New York Stock Exchange, I will not be covering that in this series. That is mostly beyond my scope, and also something that has a completely different level of risk involved, and it's a different thing. We're talking about investing in stocks, right? Now, what is day trading versus buy and hold? They're basically two different methods on how to invest in the stock market. Now, I'm going to go through each one and kind of explain. So, day trading is basically what you mostly hear about when you see movies about the stock market and things like that. Wolf of Wall Street, trading places, whatever. And that's basically somebody who buys and sells stocks every day. You spend a big portion of your time, if not all your time during the day, playing around with stocks. You buy low, you sell high every single day, like Monday through Friday. Not the weekends, the market's closing the weekends, but Monday through Friday, that's what you're doing. Now, when it comes to day trading, understand there are pros and cons to everything. But day traders, that's what they do. Their whole life, basically their career, their full-time job in some cases is to buy and sell stocks every day. They're checking Yahoo Finance and Google Finance, and they're reading they're reading they're reading stuff like the Wall Street Journal. They're doing research. It is a full-time commitment because you have to spend a lot of time looking into what's happening with the different markets you're involved in, whether it be tech, health, construction, whatever industry you're focused in, or maybe all of them. That's what you do. And you spend a large amount of time researching companies, researching what they do, researching how they perform, hours and hours and hours. You're going into stockholder meetings a lot of times. You're reading prospectus documents. You are listening to stockholder, shareholder calls. It really is a full-time job. Now, you can do it from home. In fact, many of them do. And nowadays, thanks to the internet, not before you couldn't do it from home. You have to make phone calls all day. But here, you can do it from home on the internet. And it is a full-time job. And you are taking your money and putting it in the market and buying and selling. Now, a lot of brokerage firms hire people to do this, with other people's money. That's what they do. They're bookies. They're brokers. But what I'm talking about with this series is what can you do? Now, that's one method, day trading. The problem with day trading is that it requires a lot of time. It requires a lot of research. It requires a good amount of instincts. You have to be emotionally secure and emotionally stable because you're going to have days where you're going to lose money. You're going to have days where you gain money. It's very much feast or famine. It requires patience as well as the ability to leverage your money and the ability to really keep a keen eye and keep focused on this. There was a study put out, and I believe it said that 80% of people fail at doing day trading. And I'm going to go into why in a minute. A lot of it is very, very hard. If you have a full-time job, if you have children or a family, it can be very taxing on you, and the stress levels are usually very high because you're there, you're constantly in the market, you're constantly doing research. You can't sleep. I mean, not literally, but you can't. You gotta sleep with one eye open. I know a couple folks who do day trading, and it can be very stressful. Now, one of the mistakes that people make with day trading is that they think that, it's a get-rich-quick scheme. It's not, because you're not going to get rich overnight. There's very few stocks that will blow up and make you wealthy overnight. There are some anomalies that happen, don't get me wrong, but to actually become a multimillionaire, it takes work. You're going to be in the game for a while. And It's not a complete gamble. Some people will tell you, oh, it's a gamble. It's not, because there are some people out there who do this who are very good at it. And you can be very good at it if you want to as well. But it's not my preferred method. Now, again, we're talking about me and what I think you should do, what most people should do. Because day trading can become a legitimate full-time job. And some folks find it fun. I mean, and that's fine if you do. It's just the amount of stress it puts on you, especially if you have other bills and things like that. If that's where your money's going, it can be taxing. Now, when you do day trading, you have to, speaking of taxing, you have to understand that every time you sell something and you get interest on it, you're going to pay taxes on it. There are no tax deferred accounts. I mean, you can get a tax deferred account, but most day traders, to make real wealth, they go way beyond the tax deferred accounts. And because of that, you're going to end up paying taxes on whatever money you make. And that could add up at the end of the year. You know what I mean? At first, it might not seem like a lot when you're first starting out, but over time, as you build wealth, you're going to get taxed on that money big time. So the idea is you better know what you're getting into. I would advise most people who have regular jobs or even their own businesses like I do, day trading is not the right method for you. I like to go with buy and hold. Now, what is buy and hold? Buy and hold is long-term investments. Buy and hold is I'm going to buy into a company that I believe will be successful, and I'm not going to sell that stock. I'm going to buy it and I'm going to hold it. I'm going to hold it for a very long time, sometimes even years. In fact, most of my stocks I've had for years, and they've all gone up. Some have gone down due to the pandemic, but they've all come back after a while. Because the stock market historically has grown and trended upward throughout history. So what I like to do to relieve stress is, instead of buying and selling every day and to relieve taxes, I prefer to buy and hold companies that I feel are ones that aren't going to go out of business anytime soon and ones that have potential for even bigger growth. When you look at the stock market and what companies are there, there's a lot of companies that are safe bets. I prefer to do this. It's much more safe. It's risk versus reward, which I'm going to do a whole separate video on most likely. And I do some risky investments, don't get me wrong. But when I do them, I have the mentality of, okay, this could all backfire on me. Am I okay with losing this money? But most of my stuff is pretty safe. Companies like Microsoft, Walmart, Tesla, Amazon, Visa, MasterCard, Google, which is Alphabet. These companies have historically done very well and aren't going to go out of business. Coca-Cola is not going out of business. You can pretty much take that to the bank. And you may make big gains, you may make small gains on this company. It just depends on the company, but you know it's a safe bet that as the market trends, these companies will grow, right? Someone will say, oh, what about Disney? Disney is very by the numbers in the middle. They do have some good months and they have some bad months. Obviously, with the pandemic, it affected them big time. My Disney stock went down for most of 2020, then it went back up again. I don't really have too much Disney because of that reason. There are better companies out there. And it all depends on the research. Now, I do a lot of research, but I don't do that much research. I don't spend hours and hours and hours doing research like a day trader does. I'll spend maybe a few minutes here and there looking into the company's history. But if you have mutual funds or if you have ETF funds, it does all the work for you. If you purchase a mutual fund, or actually, let's go with ETF. If you buy an ETF tech fund, that ETF fund is going to be covering the tech industry. So you'll already have companies in there like Tesla, Facebook, etc. And you don't have to worry about, is this company doing good, that company doing good? Because with an ETF fund, if one company doesn't do so good, the other company within that fund might do better, and it'll elevate everything. And the whole market goes up. So to me, ETF funds and mutual funds, which again, I'm going to do a separate video on these, are the way to go if you want the least amount of stress, and the safest way to put your money is with that. Dave Ramsey recommends finding growth stock mutual funds that outperform the S&P 500. I think that's very difficult, but possible, because I have a couple that do that. But you'll want to kind of mix it up and do like one that performs at the S&P and one that performs higher than, because the S&P always trends upward. All this stuff can be researched, by the way. Everything I'm telling you. Look up these terms, watch videos, do whatever you got to do. But day trading to me is when you're always buying and selling every day. That's what it is. Buy and hold is I buy a stock and I stick with it long term, whatever company it may be. Can you imagine, just think about this, can you imagine if you had invested $10,000 in Amazon when it first opened? You'd probably have millions. Now, it would take years and years and years and years and years, but you would have it. And if you kept investing, you might have even more. You never know. You just never know. And these are safe companies. At the time, it wasn't safe, but now we know. And you know that if you invest in safe companies, you're going to be okay. They're called blue chip companies. Blue chip stocks are the safest stocks because they might go down once in a while, but they'll always trend back up. You know? And really, that's two different strategies. So I think that if you're looking for more long-term growth, which is what I do, if you're looking to really make a lot of money over time, you got to do buy and hold. Day trading is very stressful and most folks can't handle it. If you're going to do day trading, I would highly advise you to read lots of books. And let me tell you, there have been a lot of books published on this. And get ready because, like they said in Trading Places, day trading is like it's like a shark pit. You know what I mean? Like it's kill or be killed. Whereas buy and hold, you can just kind of pick a company you think that's going to do well or one that you have seen do well in the past, like a Tesla or a Walmart. I'm using these as examples, not stock recommendations. And you just put money in that and just hold it. Don't touch it. Do not touch that money. Let it grow within a Roth IRA or whatever account you want to use. Let that money grow. And over time, you'll see dividends, you'll see capital gains go up, and then when the time comes to take the money out to sell, which will be later in life, you're pretty much guaranteed you'll be selling at a higher price because if the entire market trends upward and you invest when you're 20 and you take it out when you're 50, you're going to be making money. You're going to make money. Very, very slim chance. Very slim, but not impossible that you'll lose money on that if it's a blue chip company. You would have gained a profit. Thousands. Maybe more than that. Probably more than that if you keep putting in. And I'm probably going to do a whole video about what's called dollar cost averaging, which is actually what I do when it comes to buy and hold. What is dollar cost averaging? I'll talk about it right now. Dollar cost averaging is basically when you invest a little bit of money inside of a mutual fund, ETF fund, or a stock every month, whether it goes up and down. So if let's say you pick a mutual fund, an ETF fund, a tech fund, let's just say a tech fund. You put $1,000 in January, $1,000 February, March, April. Every month you put 1,000. I'm just picking a random number. If you don't have 1,000 a month, it's okay. I'm just picking a random number. Whether or not that stock goes up and down, it won't matter because if you're buying low or you're buying high, it doesn't matter because the market always trends upward. You have to remember that. It always trends upward. Unless the United States becomes a third world country, which is not going to happen. It ain't happening no matter who's in the White House. It ain't happening. We have way too much money in this country. We have way too many rich companies. It's going to go upward. And also, whether or not the stock goes down or up is irrelevant because you're going to end up making that money anyways because if it's low, you're buying anyway. So you're not really looking at whether or not it goes up and down. You're just putting money in. Because it's not about timing the market. It's about time in the market. Because the more money that's in the market, the higher chance you have for it to grow over time. So the more money you put in, the more beneficial it will be long term. If you put $200,000 into the market, it has a higher chance of growing than if you put $1,000 in. But the strategy would be not to put $200,000 in one day. Slowly, a little bit more, a little bit more, a little bit more. Build up, build up, build up, build up, snowball, snowball, snowball. That's the idea. Stay focused. Remember your goals. Remember it might take a while, but it will end up paying out. And actually the beautiful thing about it is when you actually hit six figures in the market and higher and higher and higher, your money will grow so fast that you won't even have to put any more in if you don't want to. Like there's going to be a time in your life if you invest wisely and over time where you might have $1 million or $2 million in the market and that money will compound. You'll have so much compound interest that you won't have to put in a penny more, it'll grow on you. You know what I mean? It's far easier. This is what I heard from other investors. I haven't gotten here yet, but I'll get there at some point, sooner than later. When you have $1 million in the market, it's easier to get to 2 million than it is to get to that first 1 million. That first 1 million might take you a decade, maybe longer than that actually for most people. But depends on how much money you make and how much you put in, right? But when you get to $1 million, it's easier to get to $2 million because you have so much in it. Snowballs. It builds up. It builds up. That's why I like buying and holding, not buying and selling. Selling, you're going to get rid of something and you're going to cash out, or take that money and reinvest. You're moving money around constantly. Whereas with buying and holding, you're putting in and you're just watching the money grow. So those are the differences. I'm not an expert in this, but I am pretty seasoned in it. I've been doing it for 5 years now, 5.5 years, and I have done very well with buy and hold. I've only sold one stock. I sold $100 worth of Tesla and I bought it right back. So, you know what I mean? I would, because I realized, wait a minute, this is still growing. That was a mistake I made. Rookie mistake. It happens. Don't worry about it if you make mistakes. Just get back in the game and be patient. Be patient. Buy and hold is a long game. With that being said, I'll bring this video to a close. I hope you enjoyed it. I hope you learned something. And like I said, all my information is just me talking about what I've experienced. I'm not a financial advisor. And any of the stuff I tell you, you can always research for yourself. Please feel free to do it. YouTube, watch multiple videos, please, because one person does not have all the answers. And also articles and other people you might know. Ask them. Be safe. Be safe and smart. We'll talk soon.